Good evening, guys. Today is 8th of August. So what you can see here is that it's been a while that I have been uploading videos on YouTube. So what I'm thinking of is to upload videos on YouTube. It may not be possible for me to upload daily, but definitely I'll be sharing my weekly trade analysis from Monday to Friday from here on. So in that way it would be better that I would be in touch with market as well as with you guys. And definitely I'm trading on daily basis, and I am focusing majorly on morning momentum trades, and I'm not sitting I'm trading throughout the day, guys. Just only one trade or maximum in case if it's expiry day, or during the second half of the day I would look for another opportunity in case if I find, or else maximum to max, max to max I'll be trading only on the morning momentum day. So if you see from August onwards, right, first and second was on holiday, so I'll be explaining to you from 3rd of August all the way to 7th of August. So if you look at my chart, guys, in a 5-minute time frame, you can see I would like to explain that about what all the indicators I'll be what I have plotted. The black color line over here is the day VWAP level, guys. So if I need to mark my VWAP level, I'll just place it here. This is the day VWAP level. The gray color line over here is the 9 moving average, and the red color line is 21 moving average, and the blue color line is the 200 moving average. The zone over here is the pivot levels, guys, and this zone over here is another pivot level. This is the pivot levels for Wednesday, and this is the pivot levels. The gray zone over here is the pivot levels, guys. And if I need to mark the green line over here, if you look into a 1-minute time frame, the green line over here is the 1 minute mid of the first candle, guys. In case of the market is first candle is bearish, we'll plot it from high to low, and we'll mark the mid of the first candle, the 0.5 levels, and 5-minute zone is the golden zone ratio, guys. So if the first candle is bearish, so we'll mark this as the 5-minute zone. So this is how usually we trade. So this is the 5-minute zone, guys. So in case if you need to plot the another candle, you can see a huge bearish candle appear. So if you plot from high to low of this candle, the 0.5 level is the green line over here, which is the mid of the first candle, and the 0.6 and 0.5 is the golden zone ratio, which is the 5-minute zone, guys. The first 5 candles. So in case if the market the first 5 candles zone is considered as the 5-minute zone. So this is the first candle. So in case if you mark here, so this is the mid of the first candle, and for 5-minute zone, this first candle, second candle, third candle, fourth candle, and fifth candle. So from low to high of the first 5 candles, we'll mark the 5-minute zone as well over here. So that is more than sufficient. This is the indicators which I would be using for my trade analysis, as well as on my daily trade decision making and stuff like that. So now, like, coming to the market, what happened on 3rd of August, you can see the market capped up huge aggressively towards the upside. You can see a 400 points in gap up price. And what happened is that whenever you find there is a huge gap up in market, what we need to wait is to wait for the market to retrace back and continue further bullish towards the upside. So if you look into a 5-minute time frame over here, you can see a huge bearish candle has been up here. So a lot of people might consider, since the market has gapped up and there may not be and seeing this kind of momentum towards the downside, random sellers might enter the market, and that's what the market sentiment is, to invite sellers to enter the market in order to liquidate all those sellers. The market momentum shows some positive momentum towards the upside and continue further bullish towards the upside. You can see here is that this is the mid of the first candle, guys, the green color line, as well as this is a 5-minute zone. As of now, you can see the huge bearish candle has appeared, breaking the day VWAP level, the black color line over here, as well as the 5-minute zone, as well as the mid of the first candle. So 5-minute has not yet been formed, so this is the third candle. So you can see breaking the mid of the first candle and closing below these levels. And seeing this kind of huge bearish candle, definitely everyone might have thought that the market sentiment might be bearish, and we can see rejection of price from the daily gap level. You can see there is one rejection over here and second rejection over here. You can see second rejection over here, rejecting price from the daily gap level, guys. And the market continued further towards the downside. But what happened is that the market swept the previous low and closed back within this range, signifying some kind of bullishness. And you can see once the market closed below the series of downwards candle, this is the last up move before it broke structure towards the downside, before this downward momentum. There is a high amount of selling pressure here, and that's why this huge bearish candle has formed. So once the price closed above this candle, you can see this momentum towards the upside, guys. Even the price even closed above these two candles over here, where price even closed below the series of this downward momentum candles, and this momentum towards the upside, signifying there is some kind of buying pressure over here. So after, once the price broke this above this high, this is where exactly you could have taken long position, keeping your stop loss just below that candle before the last down move, before it broke structure towards the upside. Even though there is no imbalance over here, the morning momentum, what we need to see is the breaking above the previous zones, guys. That's where you need to consider, for the market to consider whether the market would consider bullish or bearish. So this is one good opportunity where you could have taken your trade, keeping your stop loss just below these levels. But what you can see here is that immediately a huge bearish candle had formed, and in case if the market sentiment would have been bearish, guys, after this kind of huge bearish candle, the market would continue to break below this level. But here you can see the market failed to break below this level. Instead, the market broke towards the upside over here. You can see this candle, guys, this one candle had a huge confluence for you to take another long position over here, keeping your stop loss just below this candle itself and targeting it all the way towards the upside. And for target levels, what you could have considered is that if you try to point the retracement levels of this to all the way to this level, guys, the projection levels over here, you can see the, let me plot you, if you project these levels from this to this levels over here and plot the projection levels, you can mark the 0.2 to 0.5 levels. This is the target where you could have easily expected the market to go. This is one beautiful trade where you could have taken towards the upside. So you could have just tried your stop losses all the way to this level, guys. This is one morning momentum trade where you could have taken towards the long side, targeting towards the upside. There was one confluence that the market gapped up, so that's one reason where you could have expected the market to continue further towards the upside. Next confluence over here is that the market broke above the series of downward candles. The price closed above this series downward candles, and another bearish candle, the market closed above here. This was the best confluence for you to take long position over here, keeping your stop loss just below that candle itself. So this was one good opportunity for you to take long position. And what happened here is that after this kind of huge aggressive selling towards the upside, you can see the market liquidated this zone over here. You can see sweep of this liquidity over here. This is the buy side liquidity sweep, guys, and the market consolidated for the while. But what happened is that this is the last down move before it broke structure towards the upside with a huge displacement. You can see there is fair value gaps over here. In case if market would have been considered bullish, guys, what we would have expected is that after this kind of huge bullish momentum, the market would have consolidated within these levels and continued further bullish in case if the market sentiment would have been bullish. But what happened here is that after this kind of huge bullish candle here, breaking this previous high over here with huge displacement, the market failed to sustain, and what happened is that the market closed below this level over here. You can see this kind of huge displacement over here where the market closed below this level, signifying there is some kind of selling over here. But what you need to see here is that if you consider this momentum towards the upside, there is only one imbalance over here and there is another imbalance over here which was already been mitigated over here. And if you consider this momentum towards the upside, if you consider this order block level, the order block level is also being mitigated here. If you consider the large down move before, the order block also has been mitigated over here. So in case if you could have taken a long position, guys, once the order block has been mitigated, you can see this one candle which closed below the series of up close candle. See, what I wanted to say you is that, so in case if this is the 1 minute order block level, so what happened here is that the market liquidated here. You can see this kind of liquidity over here, struck this liquidity. In case if the market sentiment would have been bullish, what would happen is that bullish momentum towards the upside, consolidation of price like this, mitigated the order block and continued further bullish like this, guys. So once in case if the market would have closed above these levels and with huge displacement towards the upside where candles formed like this, and market would have consolidated towards the mid of fib of these levels over here, the 0.5 levels over here, and that's when you could have considered it to be bullish and expected the market to continue further towards the upside. But what happened here is that once the market has mitigated this 1 minute order block level, but what after mitigation, this was the low which has formed over here where price failed to maintain this low. Instead, this one candle which broke the low of this candle. So this was one of the best entry where you could have easily taken after the price closed below these levels, keeping your stop loss just above that candle itself. Here was another close, guys. Either you could have taken this, keeping your stop loss just above that candle, or another candle over here where it clearly closed below these levels. In case this was another best opportunity where you could have taken, keeping your stop loss just above that candle itself, guys, and targeting it all the way towards the downside. And for target levels, what you could have done is to find the fib extinction levels, the common point between this, to the common point between this, to the common point between this. So exactly you could have targeted the 1.68 level over here. This is the first target where you could have targeted, and the second target is anywhere after this kind of huge displacement. You could have either exited your trades, or so you can see the market came all the way to these levels, guys. But yeah, you could have just primed your stop losses, guys. You could have had a very good risk to reward ratio. You can see clearly somewhere along these levels you could have easily exited your trades and made a very good profit over here. These are the only two trade opportunities where you could have taken on Monday, guys, and this morning momentum trade was one of the best entry opportunity where you could have seen the huge aggressive momentum after the downward selling with imbalance over here, price consolidated and continued further bullish towards the upside. This was one of the best opportunity. But in case if you have missed out on here, and with certain complexity of understanding how the market behaved, you could have easily taken short position over here, guys. In-depth analysis of trades, candlesticks is required. You can see candle selling pressure over here, and the market mitigated the order block. You can see before the mitigation of this order block, guys, this one candle mitigated and showed some kind of bullish momentum. But after the market mitigating this low, further close below this downward rejection candles, and you can see this candle again breaking towards the downside, clearly signifying bearish momentum, and that's where you could have considered it to be bearish and traded based upon trying your stop losses. This is one trade opportunity. This is another trade opportunity where you could have taken. Coming to Tuesday, guys, in case if you see it on Tuesday, what happened is that the market gapped up, guys, and since Tuesday is Nifty 50 expiry day, a lot of manipulation happens on expiry days, guys. So in case if you are expecting the market to continue bullish, market targets all those buyers and continue further bearish, guys. This is how the market targets. Initially it shows kind of bullish momentum towards the upside, but what happened is that the market will actually initiate buyers to enter the market, and with this one momentum the market sweeps out all those buyers. This is when manipulation happening. You can see this is the pivot levels. This is the green line over here is the middle of the first candle, as well as the 5-minute zone, which I have already mentioned to you. And what I need to see is that after the market gapped up, and definitely those institutional buyers, institutional sellers or buyers definitely there will be profit booking over here, guys. They might have exited their positions off, and since they might have exited, you can see huge kind of bearish candle which aggressively showed a huge bearishness in the market. So what happened is that since the market showed rejection of price from the mid of the first candle, you can see you can see rejection of price from this first candle. And what happened is that in case the market retraced back towards the mid first candle, rejected price from here. So what I saw here is that there was a huge engulfing candle here. This was one confluence for me to take one short position over here. And after seeing this kind of huge bearish candle, what I expected is that since there is a rejection of price from this levels over here, a huge bearish candle appeared and an engulfing candle appeared. What I have done is to take a short position over here, keeping my stop loss just above this candle itself and targeting it all the way to this lows of this level. Low of this level, you can see lows of this level. But what happened is that guys, my SL got hit and I had tried my stop losses also, but let me explain to you in detail. You can see the market showed some kind of upward momentum and aggressively broke towards the downside, showing some kind of bearish momentum and leaving a fair value gap over here. You can see aggressive selling over here, as well as the market mitigated this fair value gap. And in case if the market sentiment would have been bearish, what would have happened is that after this kind of huge selling, the market retraced all the way to this 5-minute zone as well as the middle of the first candle and broke towards the downside and mitigated this fair value gap and should have aggressively broke towards the downside. This is how it should have happened in case if the market sentiment would have been bearish. So as of my trade analysis, this is where exactly I have taken short position over here and keeping my stop loss just above this candle itself and targeting it towards the downside. And for target levels, whatever I do is to mark the fib extension levels over here, the common point between this to the common point between this to the common point between this. So this is where I have targeted guys. The 1.68 level is where I initially targeted, or in case if the market sentiment is bearish, I would have considered it to continue price towards the downside as there is this sell side liquidity over here. So this is another place where I would have easily expected the market to continue. But what happened is that after the market rejected price from this level, guys, I trialed my stop loss to this level over here. This was my trial lesson. I just trialed it to this level over here with the expecting that the market might continue further bearish like that. But what happened is that the Monday VWAP level as well as the 200 moving average found a very good support over here, guys, and which showed a very good momentum towards the upside. So you can see the price took support from this 200 moving average as well as the Monday's VWAP level, where it found a very strong support over here, and that's where my SL got hit over here. And immediately after this, a huge bullish candle appeared, and what I planned is that let me wait for the retracement, and this is exactly where I have taken my long position, keeping my stop loss just below this candle. And for target levels, I just drew the fib extension level here, the common point between this to the common point between this to the common point between this. So this is the 1.68 level where I have exited my position over here. This was one trade which I have taken, guys, after my first SL got hit. Initially, since it was an expiry day, what I expected is that the market might continue bearish and break the 200 as well as the VWAP levels, but instead the market broke towards the upside, taking support from the 200 moving average as well as the VWAP level, and this kind of huge aggressive momentum towards the upside. Again, the market retraced back to this fair value gap over here. You can see with huge displacement, the market broke towards the upside, mitigated this fair value gap level over here, and continued further bullish, targeting reached all the way to 1.68 level. And you can see after this 1.68 level has been mitigated, as you can see, aggressive selling. And what happened is that all those random buyers who might have entered here, the market targeted it, and you can see a huge one directional momentum. But in parallel universe, right, what you can see here in Nifty 50 is what I need to explain to you, especially on Nifty 50 expiry day. So this was on Tuesday, guys. You can see what happened is that you can see the huge bearish candle appear, and the market showed some kind of rejection and a bullish momentum towards the upside. And what happened is that you can see, guys, the market retraced back over here. So in case if you consider the last down move before it broke structure towards the upside, and if you try to plot this level, the market took support from this discount levels, guys. And what happened is that once the market closed below this level with this candle over here, where the market failed to sustain and close below this level, is where you could have entered short position over here, keeping your stop loss just above that candle and targeting it all the way towards the downside. So even Nifty 50 was bearish at that time. With this one candle, guys, at around 1021 is where you could have taken short position over here. So in case if you look at Bank Nifty chart over here at around 1021, Nifty 50 expiry day. Okay, this, guys, at around 1021. The series of downward candles over here, this at around 1021 where the market, or 1022 where the market broke this support over here. So what you can see is that if you consider this whole momentum as one single momentum towards the upside, and the price took support from mid of the first candle, a fib of golden zone ratio, but market failed to close and broke below these levels over here. This is where you could have easily entered short position, keeping your stop loss just above the 20 moving average and targeting it all the way towards the downside. And for target levels, what you could have done is to plot the fib extension levels here, the common point in this to the common point in this. This is the 1.68 level, you can see, guys, the 1.68 level over here, and in case if you would have tried it, you could have targeted it all the way to 4.6 level over here. You could have targeted it all the way. Next you could have targeted 2.6 levels and the 3.6. I think 3.6 is the best target over here for you to book your profits over here. So this was one best opportunity where you could have taken trade towards the short side, guys. Once the market closed below the series of up close candles, this was one trade opportunity where you could have taken a trade towards the short side. So I have not captured this momentum, guys. Once I booked my profit at around this level is where I exited my trade, and I'm just focused on taking trades only on morning momentum trades, guys. I'm not focused to trade throughout the day. So you can see the price rallied towards the downside till 2 o'clock. You could have just entered short position and you could have made a huge profit over here. This was another trade opportunity where you could have taken on Tuesday, guys. Coming to Wednesday, what happened on Wednesday is that after a huge aggressive selling towards the downside, the next day the market gapped up very aggressively towards the upside, and you can see as the market gapped up, guys, and there is no expiry rating, what you tend to do is to take a long position, guys, because you can see after the market rejecting price from these levels, the market consolidated a while. And what you could have expected is that definitely the market would continue bullish, but what happened instead is that the market broke towards the downside and showed a huge bearish momentum. So let me explain to you what happened on that day. I have taken long position, guys. If you try to plot the mid of the first candle, the pivot levels as well as the 5-minute zone, you can see, as well as the 9, as well as 20 moving average, the daily gap level, the 200 moving average, everything is in confluence for you to take long position over here. See, definitely it was one of the best opportunity for you to take long position, guys. But what happened and what I need to focus and tell you is that in case if the market sentiment would have been bullish, guys, what happened is that after this kind of huge bearish candle formed engulfing these previous 2 close candles, you could have waited for the price to close above this candle, guys. But here what happened is that the market failed to close below above this candle, this downward candle. You can see exactly where the market tried to break but immediately closed back within this range, and after that immediately followed by another bearish candle over here. So if you consider this momentum over here, again the market reached all the way to these levels, rejected price from these levels and continued further bearish. So what you could have expected is that there is some kind of selling pressure over here, showing some sort of selling pressure over here. But let me clearly tell you based on price action level, guys. In terms of price action, what you can see is that what I did is to take a long position over here. Immediately after this candle, this is where I taken long position and targeted the upward candle over here. If you consider the common point in this to the common point in this and the projection levels over here, so this was my target levels, guys. This is what I expected from my side, that the market will continue and reach this levels. This was my entry opportunity. So I didn't wait for the candle guys over here to close above this level. I was in a rush to take a trade, so immediately after seeing the market rejecting these price levels and showing some kind of huge bullish candle, so what I did is to take long position and keeping my stop loss just below these levels and targeting all the way to this projection levels over here. This is my projection levels over here. So but what happened is that immediately the market formed another bearish candle and hit my SL over here. So I placed my SL over here, my SL got hit over here. What happened is that again the market consolidated here, so this liquidity over here, and again the market reached all the way and there was some sort of sideways momentum. And you can see after this the market here showed some kind of bullish momentum showing fair value gap towards the downside. You can see there is an inversion of fair value gap over here, where the market, in case if you could have expected some kind of bullish momentum, you could have easily taken a long position over here, but only in case if the market closes above this level, guys. You can see closes above this level. But what happened here is that the market liquidated all those levels over here. You can see the market swept this liquidity, swept this previous size liquidity. This is the buy side liquidity. After sweeping this buy side liquidity over here, the market broke structure towards the downside. You can see this is where the market broke structure. In case if the market sentiment would have been bullish, the market would have holded price over here, and this kind of huge bearish candle breaking this towards the downside would not have happened, guys. And closing below this series of downward candle, you can see the market clearly broke structure towards the downside. After this kind of momentum, guys, you could have clearly formed a bias in your mind that the market sentiment is bearish, so you could have definitely looked for short position. But what happened is that immediately the market showed a V-shaped recovery. But here what you can see, even if the market tried to close above these levels but failed to sustain these price levels and immediately closed below this series of up close candle over here, you can see it closed but immediately closed below this series of the last down move before it broke structure towards the downside. It immediately broke structure towards the downside, and what you could have considered is this order block level. So this was another opportunity where you could have easily taken long position over here, short position over here, and target keeping your stop loss just above this candle itself and targeting it all the way towards the downside. But definitely this is not the trade which I have taken, guys. I'm explaining based on price action levels how you could have considered the market sentiment in case if it could have been bullish. You could have considered it bullish only if price could have closed above this level, guys. See the series of downward candles. In case there was any candle which the price would have closed above these levels, and after price closing like this a huge bullish candle, you could have waited for retracement and continued further bullish towards the upside. But you can see clear price rejection over here, so definitely you could have taken short position over here. After my stop loss got hit, guys, I didn't take any trade, so I was just waiting for the market to see what would happen, and I just I had some work, so I just left, guys. I didn't wait for after seeing this kind of momentum, expecting the market would be a sideways day. But here there was a clear price action, guys. In case if I would have analyzed properly and looked at market what's happening, definitely it would have helped me to take another short position over here. So after this kind of huge bearish momentum towards the upside, you can see the market retraced all the way to this fair value gap over here. You can see there is another fair value gap over here, where the market mitigated these levels and continued further bearish towards the downside. Definitely this is not an easy trade, guys, but you could have just tried your stop losses based on the price action over here. This is one trade where you could have taken, and definitely you could have taken other trades over here, but that's not important, guys. What I'm mainly good at is to focus more on your morning trades, and in case if I just focus on my morning momentum trades, guys, I'm done for my life. I think I can generate as much money as possible, which is much more sufficient than what I'm earning right now. So I'm just focused on morning momentum trades, and definitely I would be focusing, and I'll be explaining to you only on morning momentum trades only. Coming to Thursday, guys, Thursday is Sensex expiry day, and what happened is that you can see after this kind of huge bearish momentum, the market again capped up, but here the market capped up above the Monday's pivot level, the 200 moving average, the 9 as well as the 21 moving average, clearly signifying there is some kind of sort of bullishness over here. So what did I do is that definitely I made some profit over here. After this kind of huge bearish candle, I plotted the mid of the first candle as well as the 5 minutes zone, and I knew that this is the pivot levels. So what I thought is that in case if the price closes above this candle, the series of down candle, if the market closes above this candle, that's when I will enter long position. So this is where I entered, guys. Long position here, keeping my stop loss just below this candle itself. This is where I entered, targeting it towards the upside, and my target levels was this projection levels over here, the common point between this to the common point between this. So in case if I do projection levels over here, this was my projection levels over here. You can see clearly the market reached all the way to these levels. This was some good opportunity. We have taken long position over here. you can see the market reached all the way to this production levels but showed aggressive and selling pressure, but here the market failed to close below the 21 moving average and continued. And you can see this is one good opportunity. This is where I have taken this. I exited my position exactly around 948, and you can see after the price mitigated, it showed a huge aggressive selling towards the downside. But in case if the market sentiment would have been bearish, what would happen is that the market would close below these levels. If there would appear another bearish candle over here, but what you can see here is that there is another fair value gap over here where you could expect the market to mitigate here. But what happened is that before that the market with this huge bullish candle over here breaking the 921 as well as the day gap level, this was one of the best trade opportunity where you could have taken, keeping your stop loss just below that candle and targeting the first buy side liquidity over here. This is the target level 1, and for target levels what you could do is that you can see the aggressive momentum towards the upside and the market retraced. So in case if you try to plot the fib extension levels over here, the compound in this to the compound in this to the compound in this, so what you could have targeted the 1.68 level. Let me not take this one as this was one trade which you could have taken. This is one good opportunity where you could have taken towards the long term. You could have just scalped this trade, and you can see after this the market kind of consolidated and not so good momentum. And there are a lot of opportunities where you could have taken this, but definitely I'm not focusing much on this. Just I need to show you some good opportunity trades where you could have captured the morning momentum trade. So this is one trade opportunity where you could have captured. And coming to Friday, guys, Friday definitely it was not a good day for me because back to back 3 to 4 of my stop losses got hit, which initially my trade analysis was towards the downside, but what happened is the market broke structure towards the upside. So let me focus, explain in detail to you exactly and what had happened. So you can see the market gapped down, guys. So as there is no expiry heading and the market gapped down, so definitely your sentiment is bearish. And what happened is that the rejection of price from the Monday's VWAP level, I think this is the yesterday's VWAP level. You can see this is yesterday's VWAP level over here, rejecting price from these levels and showing some kind of bearishness over here, but immediately the market showed some kind of bullish momentum, retraced back, showed some bullish momentum. So what I would have thought is that in case if the market closed below this candle is where I would have entered short position, but I didn't wait much, guys. What did I do is that after seeing this kind of rejection candle and a huge bearish candle, this is where I entered long position over here, keeping my stop loss just above this candle itself and targeting it towards the downside. And for target levels, what did I do is to plot the common point in this to the common point in this, and what did I do is to mark the 0.5 as well as the 0.6 levels over here. So this is not the candle over here. I think this. In case if I need to plot the fib extension levels, so guys, what I need to do is that this downward momentum candle, so the common point between this to the common point between this is where I need to plot. So I could have easily targeted this zone over here, the market to reach all the way to this zone over here, and the market didn't reach though. Initially you could have targeted the 100 levels, so here you can see the market came all the way to this level. But what happened is that instead of market breaking towards the downside, guys, this was one confluence candle. In case price closes below this candle is where I should have taken short position. But what happened is that the market, I took an aggressive entry over here, keeping my stop loss just above this candle, and my stop loss got hit, guys. So I have just tried it. What I thought is that okay, there is 21 moving average over here, so the market rejected price from these levels, so it would have continued further bearish towards the downside. But what happened is that the market again took support from these levels, and you can see this kind of huge upward momentum here, targeting all those random sellers who might have entered the market. So after this kind of huge bullish momentum towards the upside over here, the market here retraced back to this 0.38 level, clearly signifying some sort of bullishness over here, and the market swept this previous low as well over here. You can see this was one good opportunity where the market even swept this low, taking a long entry over here. Once if the price closes above this level over here, This is, and the price closed, and this is where you could have taken long position, keeping your stop loss just below this series of downward candles over here and targeting towards the upside in case if the market sentiment would have been bullish. But what happened is that instead of breaking towards the upside, the market, after mitigating these levels, in case if you try to plot the fib extension levels over here, there's a common point in this to the common point between this to the common point between this, you can see this zone over here, the 0.5 as well as the 0.6 level, guys. This is 0.5 and 6 levels where there is some sort of resistance happening over here, and immediately there was an aggressive selling towards the downside with huge fair value gap over here. You can see with fair value gap over here, the displacement over here towards the downside, and again the market retraced and mitigated this fair value gap and continued further bearish with this candle over here. You can see this candle which broke and closed below this level over here, you can see, and this is where you could have easily taken short position after the price, keeping a stop loss just above that candle. And for target levels, you could have easily targeted the fib extension levels here, the common point between this to the common point between this to the common point between this. So you could have targeted the 1.68 level, the 2.6 level. This is where you could have easily targeted, guys, the trial your stop loss based on the trade. Whenever you trade, guys, what I need to tell you is that you should have a bias. If in case if the market breaks like that, I'll take long position. In case if the market breaks below this level, I'll take short position. So you should be having a bias for either upside as well as downside at a particular zone. That's when that's where you have to that's how you have to trade, guys. See, below, once the market aggressively broke towards the downside, keeping my stop loss, just my stop loss got hit, guys, over here. So I would have exited my position over here, just the small stop loss, like one candle of stop loss. But in case if I would have not placed and I would have waited for the market to retrace and continue further bullish, definitely I would have lost my capital. Look at this momentum towards the downside, guys, how aggressively. So that's why it's very important for you to place stop losses, and you should be very confined in you placing stop losses, guys. In case if it's not today, tomorrow you're gonna trade, but capital preservation is the most important thing one need to focus in trading rather than making money. So whoever here are coming to trading, guys, what I want to do and teach you is that capital preservation, guys. That's the goal, that's the main thing, that's what it's needed for you to be a successful trader. Take trades daily and learn to place stop losses. Only thing you're going to learn, guys, and try to recheck and trade analyze each and every trade where you have done mistakes, and by doing so, only then you'll be able to make a good opportunity and become a very successful trader. See, what I clearly saw here is that there will be 5 different confluences here for you to take some. You can see the market swept this low over here, so there is a fair value gap over here, so the market would have swept this low, and there would be a high chance that the market, after sweeping this low, could have continued further bullish, guys. But I would have not waited here for the market to continue further bullish, because in case if the market again sweeping this liquidity over here and continues, I would have re-entered my position, guys. Not that I don't want to accept my stop loss, I would have further re-entered my position, or taken another long position once my stop loss is gone hit. But what happened here is that the market swept this low. You can see the liquidity sweep over here, sweep of this liquidity. In case if the market sentiment would have been bullish, what could have happened is that the market sweeping mitigated this fair value gap and showing some kind of bullish momentum towards the upside. This is what happens in case if the market sentiment would have been bullish. But instead, after the market sweeping this liquidity, closed below the series of up-close candles over here and broke aggressively towards the downside, guys. Once after this candle broke towards the downside, or after this kind of momentum, you could have waited for another retracement and you could have taken another opportunity over here. This is one trade opportunity where you could have taken. This would be the mitigation block over here. So this is where you could have taken trade opportunity towards the downside, guys. Or in case if you might have missed on taking short position over here, waiting for the retracement and for the continuation of rise towards the downside. So that's one good opportunity where you could have taken. So this is more or less I would be focused, guys. I would like to tell you is that 1 or 2 trades in a day is the max you need to take, guys. You should not be taking 10 different, 20 different, or 30 different trades in a day. Only if you find out such kind of scalping opportunities, definitely you can take keeping your stop loss just above 1 or 2 candle stop losses only, or else definitely morning momentum opportunities, morning momentum trades are the best opportunities for you to trade. if not this, you should take that, and if not that, you should take this. So what happened here is that in case of the market closed above this level, you could have taken long position, and the market broke below these levels, is broke below the series of downward candles, is where your bias form after the market sweeping this liquidity, is where you could have taken short position. That's it, guys. If not this, then that. That's how you need to take trades in trading, guys. And you should not take each and every trade as your personal. Take it personally, and you have to prove that no, this is what is right and you should go as per what I have decided. It's never gonna happen, guys. If you have such kind of attitude, definitely the market's gonna make you humble. You should here focus mainly based on risk to reward ratio. Very confine your stop loss to as much as possible, and try your stop losses based upon projections. That's what I would tell you, guys. And if you do this on daily basis and become very good at this, definitely you will become a very successful trader one day. And I'll be coming back to you next week, guys. And I'll be showing you the trade which I have taken, including the photos before and after photo which I will be capturing my trades. I cannot actually record it, but in case if it's possible, I will record a short form videos of me taking trades. But definitely a before and after screenshot of my each and every trade, why I have taken it, why, and everything I'll be explaining to you from next week onwards. But for today, I just mentioned you, and I have just told you how I would be trading, and I'll reach you back, guys, next week. So take care.